So welcome to another 99 Club special weekly update. August the 21st, it's a Sunday as usual. I want to start this session with a look at this chart here of the S&P 500 from 1999 to 2003. The reason I'm showing this chart is because I think it's becoming clearer about how the next bear market might look. I think it's going to be 2001-2002, which is quite a long, drawn-out bear market with long, severe drops followed by big bear market rallies. There's one there and one there, and the final one here before that typical triple bounce at the bottom. There's a lot of similarities between, kind of 1999, 2000 that are going on right now. There's all kinds of excuses I'm hearing about how there's a new way of valuing things now, much like the dot-com nonsense. People coming up with, all kinds of, there's just a lot, there's that crazy speculation again, only this time not in tech companies, but rather pension funds forced to put money somewhere in this age of no or zero in negative interest rates, and they're doing crazy things like selling puts with people's pension funds. I've just read today, just pure nonsense, and it's driving valuations up, and it's driving the market up, and the whole thing is going to end in tears in a big way. And heads are going to roll for this one. It's going to be quite something to see when it happens. But in the meantime, as I identified previously in the overall market update, this market is barring what I think is going to be a short-term correction coming up, because it's a lot of distribution gone on. The market is a little bit overbought right now, but they're not going to let anything bad happen before the election, barring anything out of their control. And money is going to keep on piling in from these pension funds into stocks and all kinds of things. Out because they don't know where else to put it. It's a massive distortion, and governments are to blame, and there's nowhere going to pass the buck this time. They're not going to put it on anyone else. It's the central bank's fault. They're the people behind this, and it's going to be devastating for people's retirements when it comes. It's absolutely appalling. So anyway, though, as you know, we are going to attempt to profit from the drop. We're not there yet. I'm expecting things to go higher. I mean, if I had someone to put a gun to my head the other day and said, well, where do you think, where's the top? And I'm not going to bet on this. The market's going to have to tip its hand first. I'd want to say something like around somewhere October, just before the election, barring any unforeseen events. I see that as the top, and then I see a steady. Probably starting January, February, we start off something like this, where we're going to, I'll be looking for, technical breakdowns. Once we get below the major averages, though, and the 40-week undercuts the 70-week, and the whole thing starts rolling down, we're going to see one big drop, and then the big bear market rally. And if we see this repeated pattern again, this is the kind of area I'll be looking at shorting the market at. Typically, bear markets have this 3 down legs interrupted by 2 bear market rallies that make you feel like it's over. So it could be a long one, but it's also going to be one, unlike 2008, this could be one that gives you 3 bites at the cherry, three big drops to roll up profits into each time. You could make a profit there, get out, make a profit there, get out, and wait for the big one to come at the end. So it's going to be a long process, and patience and nerve is going to be required, and we're not there yet. Shorter term, this market it's just treading water sideways, and it's entered distribution days now, and not to say it can't go higher. I think the Federal Reserve actually wants a small correction so that they can come up with a big party in time for the election. But it's overextended. It could get more overextended. So I'm not going to add any new positions. I'm going to let existing positions roll. Take some profits here and there, and then meanwhile turn my head to other things, perhaps like commodities, which I'll come to in a second. Regarding the Make Mom a Millionaire trades, this is an interesting exercise for me because margin is a limit here. So it's not so much what I want to trade as much as what I want to trade that's going to allow me to do it with limited funds. So that's really been the trick here. The other thing is that I'm determined not to lose this challenge, and that means I'm paying particular attention to it, and that means I have zero tolerance. If anything doesn't go the way it's supposed to go immediately, I'm going to bail on it. And if anything is showing a profit and starting to turn around and hesitate, I'm going to bail on it. I'm in step 2 now. Step 1 was complete within 48 hours in one trade with the gold trade. That's great. It won't always be like that though. Stage 2 is causing a challenge. Having said that, no money's been lost and money's been made, in fact, on the CMN trade, which I entered here at around 66 sort of level there. It had a beautiful run. But as I said last week, if it turned over, I would get out, which I did here around 71. So a nice £500 in the bank there, which makes the rolling fund up to about £2,600, which has started off as £1,000. If you're still in this, if anyone was still in this trade, fine. I mean, it's it could probably keep on going higher, but like I said, I've got to have a zero tolerance policy with this thing. If there's any danger of turning around like it was midweek there, I got out on it. But now it looks like it's going fine. It may well stay at 75, 76. Personally, I'm out of that one right now, not because there's anything bad about it. Also, the other one in there was MXL. I'm going to get out of that one again, not because there's anything particularly wrong with it. It's got a slight bounce here, a little bit of profit in there, no losses being taken, but it rolled over a little bit, not doing really what I want it to. And moving ahead with the market, possibly moving into correction mode. I don't want to be in a stock that's kind of down here somewhere. So out of that one with no loss. Out of CMN with a gain. ABX was the other one in that portfolio. And all miners, as I'll come to in a minute, I've been under pressure this week, gold miners. This one, though, I don't like the way it's floundering underneath its 50-day moving average. In all likeliness, this one I'll probably bounce back. Longer term, I wouldn't even bother. I would just keep on holding it. For the purposes of the Make My Millionaire, though, I'm going to bail on that one. It was only £1 a point for maybe a £100 loss, something like that. But I took some gains on CMN and a little bit on MXL, so fine. So there's one trade. So that cut me out of all the trades of the Make My Millionaire ones. There's 2 new ones though. I've added, and they're very interesting. The first one is one I touched on last week, IART. It started to make a move, and I'm in at around 85 area. This is one I touched on last week, so I won't go over into it again, but you've got these beautiful boxes piling up here. This one, I was maybe seeing if it might sag down a bit like these two, but this one could be more looking like this one back here. When it didn't sag down, it just kept on rising up, and it's, as you can see here, it's ticked up a bit on increasing volume. So I've taken a pilot position. I discussed what a pilot position is last week. You can watch that video again if on the YouTube channel if you didn't catch it. So it's an initial position. If it comes back down here, then I'll have a jump opportunity to get in and get more. But this one looks like it could be heading up into the new box. So that one is in the Make My portfolio right now. I'm also looking at a new one. I've added a new one, Newmont Mining. It's a gold miner right on the very edge. And what I mean by the very edge is it's in what I call the crosshairs. We've got, as you can see there, very clear support at this $44 area right there. Something like that. Pretty clear, I think you can see. And we've got another one there. But these steps, you can see them going all the way up. But now if I draw the diagonal trend, something like that, you can see it's right on it. As it moves across here, it's kind of right on that board of support and a rising trend. It's had, you can see here with these tails, it's tested that line and come back off of it. So that's really right on the edge. Newmont Mining, what it does from here, it's either gonna go down, in which case that's a tight stop loss, one would hope, or it's just forced into going higher. And these kind of entry points here make for quite interesting plays. The one I prefer, which is in exactly the same position, is another miner, which is Royal Gold. I actually prefer this one, but because of margin requirements on my limited funds on the Make Mum a Millionaire account, I went with Newmont Mining. But I actually think this is exactly the same story, only a somewhat better picture. There's that line of support, something like that, and there's that diagonal intersection, something like that, and it's right on it, right in that crosshair. The two lines meet. If it heads down, I'm not, anything can happen, but odds favour this one going up, and it's an ideal entry point if it does. So that's the gold story. Is gold is on the edge, and that's what might be reflecting in the miners right now. We've got a similar thing here. There's that support there around 125, which I made money from before with the Make Mum a Millionaire thing. But then here, if I draw this, you see what I mean by this line here. It's kind of, sorry, botched that one. It's like on the edge again, something like that. And gold again from here, it's like make or break. Gold and gold miners, they're really at the kind of make or break point. If you look at GDX, if I look at a reference point for all gold miners is GDX, because that's like an ETF for all gold miners. And similar thing here, it's right on its upwards trend. Gold, so short term and long term, I think gold's beautiful. Short term, is gold going to have a bit of a correction? It really depends on what happens pretty much tomorrow or Tuesday. So it needs to just bounce off of there. If not, it could go down. But that's what I'm looking for, right? Is tight stop losses. Anything can happen, but if I bail on NEM or RGLD, then there's not much loss. But that's got beautiful support on that one. As I say, NEM is my second choice, and that's the one I went with. And Make Mother Millionaire portfolio. Very, very similar story right there. It has to go up or go down. It's crunch time. So looking at a couple of other stocks that I was already in previously. Last week I mentioned semiconductors, microchips. I wanted to be a couple of stocks in there, and both of them did beautifully. AMBA was the first one, and actually this was a where we were at 15th. So this was we started off the week really well. They went into a little corrective pattern here, and it's back on track here. The big week for it was the previous week. But here's another one. It's got great boxes here around 55, 60, 65. Looks like it hit the top of the box and just might be consolidating in this 60 to 65 box. Still on track though, and the uptrend remains intact. I'm still in that one. The other one which did exceptionally well was AMAT. I mentioned this last weekend. And look at this gap up on massive volume right there. It doesn't get much better than that, particularly if you're playing options. That sets the profits on fire. Just exactly the same thing. We've got a stock in the right sector that's being accumulated in stages, and this one goes. Maybe settling into a 25 to 30 box now. We'll see, but I'm not going to dump a stock that's performing as well as that. The other one, which I was in the previous week, and again had a lovely gap up with here. I was in this one 2 weeks ago. I think I mentioned it when it was around there, something like that. Up it went. Again, beautiful profit, especially for options. And this one's happy. Just looks like it might be consolidating in the 40, 45 area. I'll let that one ride. Have a stop on this one at around 39, something like that. And for the other two, a similar thing. You just want a stop loss right below that box. I am also, as well as for the Make Mum a Millionaire portfolio, I'm also in that separately. I think this is another good looking stock here, IART, that looks like it just started to budge up right there. So the really high flying stocks, it's hard to catch them, to be honest, at their very low part of the box. So you're just gonna have to, I just take a pilot buy and just get in on the action, hold my breath. DY is one that was an interesting one that I touched on last week. It was a beautiful box being set up here, and then, as I said last time, for no reason this thing just went down on. But I also said that I was staying in this stock because there was no news why that had happened. I still liked it, and it was right on old support right here. And sure enough, the days that followed, it sort of edged its way up again. But look at this huge buying volume on Thursday. So like I said last week, there's something definitely odd with that one, and I'm still in it. And now I'm not looking to get out break even. Now I'm going to let this one ride. This one could really gap up or shoot higher. And if it hits 100, that could get another good run because it just psychologically breaks through the $100 mark. I wouldn't enter it at this position, but entered here and hanging on as I was. That I still think this one's good for the ride. So nothing new to add. Looking at riding existing ones, scraping the odd profit here and there. And with a close eye on gold in particular, sort of crunch time for gold and gold miners. Big Federal Reserve meeting this week that the people are waiting on. So expect a lot of hesitation building up to that time. It all depends on are they going to raise rates or not. Now, I can tell you that the Federal Reserve is not going to raise interest rates before the election. They just won't. Now, but what people think is going to happen may affect the gold price. Basically, if interest rates rise, that's going to be bearish for gold in the short term because gold doesn't pay any interest. So what happens up until that meeting is going to be the key. If there's any feeling at all that they may raise rates soon, that could set gold off on a correction. So that's really what we're looking at there. So that's all for this week. More next time. Speak to you then.